Hello students, welcome to Account-Wise Academy. This is Latha Venkateshwaran. Sinking fund method of depreciation. The sinking fund method calculates depreciation using a sinking fund table to set aside a fixed amount each year for replacing an asset at the end of its useful life. Under sinking fund method, we are going to use a sinking fund table that is used for setting aside a fixed amount each year, and that fixed amount is going to be used for replacing an asset. Let it be machinery. At the end of its useful life, that machinery will be sold, or it will be sold as a scrap, and we are going to replace it with a new machinery. So that fixed amount is used for that. Usually when we calculate depreciation, we just reduce the value of fixed assets, right? But in the case of sinking fund method, we are going to reduce the value of the asset, and equivalent to that value of the asset, we are going to set aside a fixed amount. And that fixed amount is going to be used for buying the same asset or different asset. Okay. The journal entry for depreciation under sinking fund method is depreciation amount is debited to the depreciation account. That is usual. So depreciation is treated as an expense. That is why depreciation account is debited, as all the expenses should be debited and credited to the sinking fund account. What usually we will do, the journal entry for depreciation is depreciation account debit to asset account, right? But under sinking fund method of depreciation, asset account is not going to be credited. We are going to credit the sinking fund account, and that is a reserve. We are creating a liability reserve by crediting it to sinking fund account. That is why the sinking fund account is credited. The credited amount is invested in outside securities, like securities, like bonds, which earn interest over time. So this amount is credited to sinking fund account. That amount is going to be utilized to invest outside in some investments like securities, bonds, and those investments are going to fetch us interest over the period of time or over the life of the asset. By the asset's expiry, when the asset becomes obsolete or when the life of the asset gets over, the accumulated fund plus interest, that is the sinking fund amount, total amount plus the interest, is used to replace the asset, making the process smooth and planned. Instead of planning for buying the asset at the end of the life of the asset, suppose the machinery becomes obsolete after 5 years, instead of thinking about buying a new machinery at the end of the 5th year, we are planning right from the starting of the usage of the machinery. As soon as we bought the machinery, we are planning for buying the new machinery at the end of its useful life. Unlike other methods, it links depreciation to building a fund, ensuring money is ready for future replacement. So here, depreciation is used for building a fund. That fund is called the sinking fund, okay? Ensuring money is ready for future replacement. We are planning, as soon as we buy the machinery, we are planning for future, for replacing that machinery in the future. What are the journal entries to be passed for sinking fund? First, we are going to see the first year. First year, you are going to buy the asset, right? When the asset is purchased, asset account debit to bank account. Here, asset value is going to be increased. That is why you are going to debit it. Bank account is also an asset. Here, the asset value is going to be decreased. That is why it is credited, bank account. For providing depreciation, depreciation account debit. Depreciation is an expense. So when the expense increases, it has to be debited to sinking fund account. Here, you are creating a reserve, liability. So that when the liability increases, it has to be credited. That is why sinking fund account is credited. Next, for transferring depreciation to P&L account. This depreciation which you have debited will be transferred to P&L account. First, that has to be credited to depreciation account. Okay, that is cancelled by crediting it. Next, P&L account is debited. P&L account expense side is going to be increased. That is why P&L account is debited. For investing the amount. For the first year, the sinking fund you have created, no, that has to be invested. So equivalent to the sinking fund account which you have created, you are going to open a, or you are going to invest in some investment. That is called as sinking fund investment account debit. So investment is an asset, it is increasing. That is why sinking fund investment account is debited to bank account. Again, you are going to buy from your bank account. So bank account is an asset, the asset value decreases. So bank account is credited. For the subsequent year, what are the journal entries to be passed? First, for the receipt of interest on investment. This investment you have made. For that, you are going to receive interest from the second year onwards. So the entry to be passed is bank account debit, your asset bank is going to be increased. So bank is debited to interest on sinking fund account. Your income is increasing. So interest is credited. For transferring interest, this interest on sinking fund account, which is credited here, is going to be transferred to sinking fund. For transferring, the opposite of credit is debit. So interest on sinking fund account debit to sinking fund account. Equivalent to the interest amount, we are going to increase the liability, that is our reserve. Okay, that is why sinking fund account is credited. Next, for providing depreciation, these three entries are similar to the first year entry which we have passed. So depreciation account debit to sinking fund account. This depreciation amount will remain the same throughout the life of the asset. That is what we saw in the beginning, right? Sinking fund method of depreciation uses the sinking fund table, and a fixed amount of depreciation will be charged every year. So this depreciation will be fixed. It is like the straight line method of depreciation. Throughout the life of the asset, only a fixed amount will be calculated, but that fixed amount will be calculated using the sinking fund table. That we have to calculate. Okay. Again, for transferring to the P&L account debit to depreciation account. For investing the amount, sinking fund investment account debit to bank account. Only the sinking fund investment account now is going to include this interest part. See here, interest part, sinking fund account. This includes the interest, no, that part, and the depreciation part from the second year onwards. From second year onwards, we are going to have interest on sinking fund investment plus the depreciation charged for that year. Interest for that year plus depreciation will be the sinking fund investment from the second year onwards to bank account. So same. The journal entries to be passed for the last year. These four entries will be same as we have passed from the first year till the year before the last year. For receipt of interest on investment, bank account debit to interest on sinking fund account, and for transferring interest to sinking fund account, interest on sinking fund account debit to sinking fund account. For providing depreciation, depreciation account debit to sinking fund investment account. For transferring depreciation to P&L account debit to depreciation account. These entries we have already seen. Next comes the sale of investment, bank account debit to sinking fund investment account. This is the opposite of purchase of investment or purchase of asset. When you sell your bank is an asset, it is going to be increased. That is why it is debited. Next, when you sell, the sinking fund investment account is also an asset. That value is going to be reduced or it will become zero. That is why it is credited. For transferring profit on sale of investment, if there is a profit on the sale of sinking fund investment, entry will be sinking fund investment account debit to sinking fund account. For transferring the loss on sale of investment, it will be the opposite entry of the above entry, sinking fund account debit to sinking fund investment account. For closing the asset account by transferring the balance of sinking fund account, we have to transfer the balance of sinking fund account and the asset account will be closed. The entry is sinking fund account debit to asset account. To master the sinking fund method of depreciation, let us solve an exam problem. Okay, Mr. Sharma bought a plant on 1/1/21 for a sum of rupees 2 lakh, having a useful life of 3 years. The estimated scrap value of the plant is rupees 20,000. Depreciation is calculated using the sinking fund method. The sinking fund investments are expected to earn interest at 5% per annum. The sinking fund table shows that rupees 0.317208 invested yearly at 5% per annum produces rupee 1 at the end of 3 years. Okay, so this sinking fund table I was mentioning, no. So we are going to calculate depreciation using this sinking fund rate given from the sinking fund table. At the end of the third year, on 31/12/2023, the investments are sold for rupees 1,50,000. A new plant is purchased on 1/1/24 for rupees 2,30,000 and the old plant scrap is sold for rupees 15,000. You are required to prepare the following accounts in the books of Mr. Sharma. Plant account for the old plant, depreciation fund account, and the sinking fund investment account. Let us see how to do the problem. The first step is to find out the amount of depreciation to be charged every year. So this is the part of the question which we just saw. Now let us see how to calculate the amount of depreciation. Amount to be charged to P&L account and amount to be transferred to sinking fund investment account. Charged to P&L account is the depreciation and the sinking fund investment is the amount to be invested yearly. That is the equivalent value of the depreciation. Okay. What is the original cost of the machine given? It is given as rupees 2 lakhs. And the estimated scrap value should be deducted. While calculating the value of the asset to be taken for charging the or finding the depreciation, we have to deduct the estimated scrap value. So here estimated scrap value given is 20,000, that has to be deducted. So plant value on which depreciation or sinking fund amount to be calculated is 1,80,000. Amount to be charged to sinking fund account is 1,80,000 into the sinking fund factor they have given. See, 317208, that has to be multiplied. That is the amount of depreciation to be charged for the life of the asset. 57,097 is the amount we get when multiplied 1,80,000 with 0.317208. So this is the first year amount to be transferred to the first year of sinking fund investment account. Okay, this will be the yearly amount to be transferred to P&L account, but the interest may vary because every year we are going to accumulate our investment with the amount of the depreciation that is to be added. Okay. First, let us open the plant account. The journal entry for purchasing the plant is plant account debit to bank account. In the journal, bank account is credited, while in the ledger of plant account, it will be debited to bank on 1st January 2021, 2 lakhs. On seeing, we find out the debit balance total is more, so we take that balance to the credit side also, 2 lakhs on both the sides. On December 31, the balance will be written as by balance carried down, 2 lakhs. The next entry we passed was for charging the depreciation. The entry was depreciation account debit to sinking fund account. So now we are opening sinking fund account. In the journal, depreciation was debited. So in the sinking fund account, depreciation will be credited. On December 31, 2021, by depreciation 57,097. On seeing, we find out the credit side total is more. So we take the credit side total 57,097 on the debit side also. The balance will be written as December 31 to balance carried down 57,097. Next entry to be passed is sinking fund investment account debit to bank account. So we are opening sinking fund investment account now. In the journal, bank account is credited. So in the sinking fund investment account, it will be debited. On December 31, 2021, to bank 57,097. On seeing, we find the debit balance total is more. So we take the total of debit side 57,097 to the credit side also. On December 31, on the credit side, we write the balance as by balance carried down 57,097. For the second year, in the plant account, we wrote on December 31 by balance carried down as 2 lakhs. So that will be brought down on January 1, 2022 as to balance brought down 2 lakhs. Again, this balance will be carried forward to the next year. December 31 by balance carried down 2 lakhs and the debit side total, credit side total is 2 lakhs. The plant account balance will remain the same till the end of the life of the asset. Only the last year it is going to change. Let's see the sinking fund account for the second year. December 31 to balance carried down 57,097 is for the first year. That will be brought down on January 1, 2022 as by balance brought down 57,097. Next, the interest will be charged on this 57,000 or we will be receiving interest on this 57,097. That is the investment we have made. So by interest account 57,097 into 5%. Why by interest account? The journal entry for receiving interest is interest account debit to sinking fund account. So this is the interest on sinking fund investment. Investment made is 57,097. On that 5% is 2855. Next, yearly depreciation, which we calculated as 57,097. That will be uniform till the life of the year asset plant. That is in this case for 3 years. So by depreciation 57,097. On seeing, we find out the credit side balance is more. So we take the credit side balance, total of credit side. We get a balance of 1,17,049 to the debit side also. And on December 31, we get the balance carried down, to balance carried down on the debit side as 1,17,049. Let's open the sinking fund investment account. We saw on December 31, 2021, by balance carried down was 57,097. It will be brought down on January 1, 2022 as to balance brought down 57,097. For the amount to be transferred or for the investment to be made, the amount will be depreciation plus the interest received. Okay, so the depreciation for the second year is 57,097 plus the interest received for the first year investment is 57,097 into 5%, which comes to 59,952. That is 57,097 depreciation plus 2855 interest on the first year investment, 59,952. On seeing, we find out the debit balance is more. So 1,17,049 is taken to the credit side also, 1,17,049. On December 31, by balance carried down, 1,17,049 will be written on the credit side. Students, now we are going to do the third year. For the third year, first we will open the sinking fund investment account. in the sinking fund investment account, second year we had a balance of buy balance carried down 1,17,049. That will be brought down on January 1, 2023 as to balance brought down 1,17,049. Next step is to find out the investment amount. Investment amount is depreciation plus interest received, right? So depreciation amount is uniform, that is 57,097, that will be invested outside, plus the interest will be, this is the balance brought down, on this we are going to receive interest 1,17,049 into 5%. 5% of this comes to 5852. So this is the investment we are going to make for the third year, 62,949. Okay, next see the question here. We have at the end of the third year, that is on 31/12/23, the investment, see at the end of third year on 31/12/23, the investment are sold for 1,50,000. Can you see here? So these investments are sold. What is the journal entry when you sell the investment? When you sell the investment, the journal entry will be bank account debit to investment or any asset. The journal entry will be the same, to investment account. Okay, here bank is debited because your bank balance is going to increase, and investment is credited because investment is an asset, that balance is going to be reduced or become zero. Okay, so here in the journal entry, bank is debited. So in the sinking fund investment account, it will be credited by bank 1,50,000 is the sale value of the investment. Now on seeing, we find out the debit side balance is more for the third year. So we take that balance to the credit side also. So the debit side balance is 1,79,990, that is 998, sorry, that is taken to the credit side, 1,79,998. On deducting 1,50,000 from 1,79,998, you get a balance of 29,998. So this balance is the balancing figure, and it will be transferred to the sinking fund account. What is this amount? This amount will be the loss on sale of investment. Okay, so your sinking fund investment account is closed now for the life of the asset. I want to tell you one point. The sinking fund account balance is on the credit side. No, if it falls on the debit side, if you have the sinking fund balance on the debit side, it means that you have earned profit on the sale of the asset. So that you have to remember. Okay, so let's proceed to the sinking fund account next. Sinking fund account is the account to be seen next. On December 31, 2022, that is the second year, we have a balance carried down of 1,17,049. That will be transferred or brought down on January 1, 2023 as buy balance brought down 1,17,049. Next on December 31, buy interest account. Interest received on 1,17,049 at the rate of 5% is 5852. Next, buy depreciation to be charged every year is 57,097. And in the sinking fund investment account, we saw a balance of 29,998. That was on the credit side of sinking fund investment account. In the sinking fund account, it will be transferred to the debit side. To sinking fund investment account, what was that? Loss on sale of investment, 29,998. On seeing the third year, we find out the total of the credit side is more. So we take the total of the credit side, that is 1,79,998 to the debit side also. On deducting 29,998 from 1,79,998, we get a balance of 1,50,000. That will be transferred to the plant account, and that will be the amount of accumulated depreciation. Okay. Now let's see the plant account for the third year. So to balance brought down from the second year, it is 2 lakhs. Now we saw in the sinking fund account a debit amount of 1,50,000 was transferred to the plant account. So in the plant account, it will be transferred to the credit side. December 31, by sinking fund account, accumulated depreciation is 1,50,000. And this plant, no, it has been sold for 15,000. See, the old plant scrap is sold for rupees 15,000. Though the estimated scrap value is 20,000, actual sale value is only 15,000. Okay. So that actual sale value will be taken in the plant account. By bank, scrap sold 15,000 on December 31. On seeing, we find out the debit side total is more. So we take 2 lakhs on both the sides. On deducting 1,15,000 and 15,000 from 2 lakhs, we get 35,000 as the balance in the plant account. That will be transferred to the profit and loss account. That is the loss on sale of plant, December 31. So we have finished all the account. Now we are going to open a new account because new plant is purchased on 1/1/24 for 2,30,000. Now let's open the new plant account. This is the new plant account. We have purchased plant, entry is plant account debit to bank. So on January 1, 2024, to bank account 2,30,000. With this, we are completing the sinking fund method of depreciation. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.